Okay, ladies and gentlemen, today is the 2nd of Feb. It's 12:18 local time. This is the euro dollar on an hour chart trading at 1.20346. So this is a classical example of a dumb money squeeze, okay? We see that on a regular basis in Forex. So I've shown several examples. Recently I've shown more stop runs and stop hunts, but this is like a position squeeze. So you see those green bars, these are dumb money buyers that tried to buy a reversal up in euro dollar because they all think euro dollar will go up, and they massively buy over several hours. The smart money algo, the cartel, detects it and pushes the price down against them. And now with an exaggerated move below the lows, also below the long-term lows, going of course also for the stops, but I draw your attention to this particular phenomenon. It's a regular thing in FX. I mean, right now you see around the world, all kinds of different people looking at those phenomena in other markets, but in Forex we have that, like when the buy side accumulates on one side, the market makers, the smart money, they see that and push the price against them. And that's clearly market manipulation conducted by them. And that's one of the reasons why, the vast majority of market participants in FX loses, you see. So I've shown before, obviously, the interaction and how this fits together with stop hunting, right? I've and not only that, I've done much more. I've actually provided you, and please check the playlist, with all the other things I've reverse engineered, such as the dumb money tolerance principles. So how does the smart money push the price and pull it, of course, subject to the dumb money positions and subject to the targets, the stop accumulations. And of course there are other things. It doesn't end there. There are also meter levels, which I describe in the course. There are also short-term games, such as fake support, fake resistance, which I've shown in the free video. And there are some other things. But, like the bread and butter of understanding the market causalities, understanding dumb money positions, dumb money flow, stop accumulations, and of course the chart itself as well. But this is basically the bread and butter of the causality, the market structure. At this stage, everybody should completely understand how manipulated FX is. It's completely manipulated. Okay, it's not just that now and then there's an occurrence and then it happens. It happens basically constantly. The complete market is in the hands of the smart money entities. I have also said before that one should understand that to a certain degree that may be necessary. So be aware that if the market structure would be different, that would imply that the market would be a different market in terms of its characteristics. So it would be less liquid, probably even be more expensive to trade, etc. So that has to be understood as well. So right now, 2021, foreign exchange is the world's largest financial markets in terms of volume. It's highly liquid. It's comparatively cheap to trade. It's open 24 hours, and the spreads are normally tight, especially compared to other markets, which is why traders are drawn into it. But at the same time, as shown before, the majority of those traders loses. So if those smart money entities, and don't get me wrong, I'm not trying to justify any of these manipulation moves. They are clearly unfair, often illegal, and the big entities, they pay fines every 4, 5, 6 years in the size of billions for those for this manipulation. Don't get me wrong. However, it should also be understood that if they wouldn't have full price control, they wouldn't offer the buy side to decide when to buy, when to sell, how much, etc. And it would be a different market. Right now, the market is efficient in the sense of maximum manipulation. Okay, so it's not random. Okay, understand that. In academic discussions and debates, when they talk about efficiency, they mean randomness. That's it's efficient in the sense of market manipulation, which is non-random. It's not random because they have full price control, as you can see here. Anyways, I like to make those short videos because that doesn't take me a lot of time, and I can do them in between. I'm busy all day with trading, obviously, and other things. So, you know, and more timeless videos, let's say, they require me to do proper preparation. But I like to capture those incidences, like here, like the stop hunts, like here, the position squeezes, the down money squeeze. Because, you know, what you can do, you see the chart in front of your eyes, and obviously you're blind, you just see the naked charts or some useless price indicators. But if you watch those videos, you will understand what's going on behind the curtain, so to speak, alright? So that's why, you know, especially in extreme cases like here, I try to quickly record and post those short videos, so you can actually check your own chart and say, right, that's what's going on here. That's why the price went below the low, you see, boom, pull back up. So some people may say, well, the low has been cleaned, so now I'll buy, and that's what the dumb money did. You see, so they were not that unsophisticated in this incident. They actually thought, okay, look, the low has been cleaned, this is a nice kind of W formation, I'll buy. And because everybody thinks that around the world, it becomes some kind of self-fulfilling prophecy. Boom, and you know, there's a strong smart money bar down, cleaning out all, especially the people who try to buy the market and place a tight stop. That's always a bad idea, because, you know, they go for that several times. It's always a good idea, you know, to combine price action analysis with, you know, like those principles. All right, anyways, yeah, I just wanted to capture that. Would have been nice if I could have captured that before, but fine, I couldn't. So yeah, I will upload this directly now. The time now is 12:25. Stay safe.